Hi, everybody. I'm Elbruz with Outrun. Good to be here today. And I have my friends Mo and Tim. Maybe a quick intro from you guys.
Yeah, happy to start. Hey, everybody. I'm Tim. I work at Blockdaemon as a managing director for our German entity. I'm part of the EMEA sales team. Blockdaemon is the institutional Web3 gateway. We are the leading global infrastructure provider, running over 250,000 nodes. And we have an institutional product stack consisting of dedicated nodes, API suites, staking solution, non-custodial staking for over 50 protocols, and we have MPC wallets and vaults offering all to institutions.
Hi everyone, my name is Mo Yousef. I'm the CEO and co-founder of Fuze, based in Dubai. Fuze is a fully regulated crypto as a service platform. We enable banks, fintechs, our remittance companies, payments companies, a number of different regulated businesses and institutions to launch different products in the world, our crypto world. We have offices here. We have offices in Turkey. We operate across Middle East, Africa, and Turkey.
All right, and maybe a little bit more color from my end. I'm Elbruz, originally from Turkey. I live in Austria, Vienna. We have an advisory firm called Outrun. We advise companies about their market expansion needs into emerging markets as well as developed infrastructure markets. And here we go. The moderator, Ersoy, just joined us. Hi, Ersoy.
It's okay.
No problem.
No problem.
And previously, I was at Bitpanda as an MD for Turkey and MENA. And after that, I tried to understand how blockchain and payments work, and I joined a company called PaySafe, launched our stablecoin infrastructure there, and then now I'm just advising companies how to launch services and products with stablecoins and blockchain in general. So that's about me. I think Ersoy will join us momentarily, but maybe to get going, the topic of the panel is how emerging markets actually appreciate institutional crypto adoption. And since we are in Turkey, one of the most vibrant markets in crypto globally, what are your observations about the market and how things have changed in recent months after the regulations have been announced? Maybe let's start off with that question, and I'll pass it on to Ersoy.
Yeah. Maybe I can start, right? So, we started Fuze back in 2022, and the idea was we saw in other markets, there's a lot of big companies who were looking at crypto, right? So you had JP Morgan and Citibank and Visa and a bunch of others who were dabbling in it. And so we said, we want to be that single API platform that can enable businesses to do stuff in this space. Fast forward now 3 years, and the world is completely different, right? You see so many companies are launching crypto trading, crypto payments, stablecoin payments, and it's becoming a very hot topic. You see big companies like Shopify, Stripe, Walmart, all these companies are looking at the space. And very similarly, what we've seen in Turkey is that the institutional demand has really changed. So we've probably met the top 25 banks in Turkey. There's some big ones. The biggest banks are already launching different apps and products. But many of the banks we speak to, many of the fintechs that we speak to realize that this is a space that they want to be in. And I think it's driven by two things, right? One is that the banks and the larger fintechs, they see crypto exchanges as their competition, right? And you see that line between fintech, banking, and crypto starting to merge. Many of these crypto exchanges now are launching cards and payment systems and so forth. And the banks want to protect their customers. And I think the second reason is that there's definite customer demand. The reason why we decided to set up in Turkey so quickly was because it's the third or fourth biggest crypto market, and the consumer adoption, customer demand here is so high that we want to make sure that traditional players, TradFi players, have the option to also participate in this economy.
Yeah. And maybe, Tim, from your perspective, because you do the infra part, right?
Well, starting from a global perspective, so we work with close to 500 institutions around the globe. We have entities and offices in Americas, in New York, specifically in London, in Abu Dhabi, in Singapore. So we have local teams in all key markets working with all major TradFis, custodians, exchanges on a global basis. So right now I think we're in an environment, especially pumped through sort of what's happening in the United States right now, where we're super excited, really positive as well for our product stack. We provide MPC wallet technology, which is based on self-custody on-prem hosting. And what we saw in the news that banks now have the permission to do that themselves and provide that to their customers. And we also, it's my first time in Istanbul. We, from an EMEA perspective, focus more on London, on Zurich, sort of the key players there. But we're really looking into Turkey now. We're already working with some banks here, providing access products like dedicated nodes and connecting them to blockchains. But really excited area. We, as we discussed, also active in Dubai and Abu Dhabi. Yeah, it's a great market to be in.
Cool. Ersoy, any comments?
Yeah. Thank you, Elbruz. I mean, you can continue. By the way, I apologize from the audience and from the organizers. I was mingling around and there was a delay. But I think in future we can digital twins or AI can do this moderation job, and you're doing very well. And it's relevant that like maybe it's institutional of moderation is on ahead. Quickly introduce myself. My name is Ersoy Erkazancı, ex-asset management, then TV presenter for Bloomberg. Before Istanbul, Dubai, now living in London. So the topic is very interesting, institutionalization of crypto adaptation. So whenever I say I'm from Turkey, especially to foreigners, they say, okay, we are very interested in Turkey because crypto adaptation in Turkey is very high and there's crypto native, but mainly in retail. So I want to discuss more about what's happening in Turkey on the institutional side. How do you see the landscape? Are you working with institutions in Turkey, or you can compare Turkey with other countries? Like I know that you are in Vienna, in Europe, or maybe you can compare with Middle East.
Yeah, I think like just to piggyback on what Mo and Tim said, when you look at these waves of new technology or new, let's say, consumer trends show up, there's always a hesitation moment, and this happens with any institution because they don't want to have a reputational damage. They don't want to end up on the newspapers with saying that, oh, we got hacked, banks, fintechs, etc. So they await for a regulatory framework so they can actually launch a product and a service and say, okay, we abide by the regulations and we can actually provide a secure, confident service to our customers. So when you look at crypto's history, it's still quite new. It's about 15, 16 years now since Bitcoin was launched. And I think most institutions wanted to see how the market behaves against crypto and assets in crypto and digital assets. And now we're at the cusp of a situation where the market has proven itself because there's a consumer pool now. Consumers have indicated that this is an asset class we want to expose ourselves to. We are trying to do it through exchanges, brokerages, or DeFi, or DEXs, and we are looking for better or more robust tools and something that would give us more convenient access to them. And I think, as we have seen in Europe and Middle East and Turkey now, more banks and neobanks and fintechs are venturing into the space with some training wheels, as I call it. They don't have their own products. They are leaning on partners. They are trying to understand the asset class. They don't have divisions inside. They don't have the talent who understands it. So they are treating it almost like FX, I think, which is a mistake, by the way. And they are slowly getting into the motion of offering these services. And I think most of these business discussions that I've been exposed to at the bank level, the board level, everybody has a business case. We're going to make this much money from crypto trading in the bank app. We're going to have this many users. But I think the reality is a little bit different. Why would anybody stop using their exchange product and come and use your product if you're a bank or a neobank or a fintech? So I think I appreciate the excitement around it, and I think institutions are trying to do the right thing, but I think they're approaching it from a wrong angle. They think that just because I have a bank logo and brand equity and trust, people will buy crypto from me. So I think they need to fix that go-to-market strategy before they see the real benefits of it. So that's my take on it. I welcome it. I think Turkey is a leading market in that sense, where our banking system is, I think, ahead of Europe and US. Infrastructure is also quite robust, but any emerging technology in an emerging market could mean accidents. So you just need to be super careful about it. And my advice to most of these incumbents is to take it slow, take it easy, start with the basics. Don't try to offer Pepe token on day one. You can launch it after a while and take it, with baby steps. But that's my approach.
Thank you, Elbruz. Mo, by the way, it's great to see you here. I know Mo from Dubai. We are good friends, and I'm glad that you are coming more to Istanbul now. And tell me why you are in Istanbul, by the way. I know you have a presence, and I know Ayşegül is here. Say hi, Ayşegül. So, and how are you dealing with the regulators, institutions? Can you give us some maybe numbers or use cases why institutions are working with you?
Yeah, I mean, so look, so in Dubai, we've enabled the largest, what do you call it, a digital bank. And we started out with 5 tokens, actually, to your point. But we went live with Pepe just
okay,
now.
interesting.
So now they have some 65 tokens. We're growing to, about 350. So my view is a bit different, right? So I think that all the banks that we've spoken to, around the 20 or 25 banks we've spoken to, they have a view that we want to do custody first, right? Because they think of a bank account.
Yeah.
And very quickly, the thinking has evolved and said, you know what, you don't make any money in custody only. And so now banks are like, hey, we want to launch trading. And then they're like, oh my God, if the market is sideways, we want to launch staking, right? And so the banks are going through that, that
learning
kind
curve.
of thinking as well, the learning curve, right? And so the benefit that Fuze provides is we're a single platform to enable all these different things in investment and in payments as well. So many of our UAE or Dubai-based fintechs and banks are saying, so we've successfully launched trading, now we want to launch stablecoin payments. And we're getting a ton of demand here from different fintechs, more than banks, who are saying, hey, how do we enable stablecoin payments in a regulated way? The same way you have a B2B rail on fiat, we want to enable a parallel rail for stablecoin payments, right? And the technology that we provide makes it super easy to launch any use case in investments or any use case in payments.
Can I ask a question, a follow-up question to Mo maybe? Does treasury come up as a topic?
Yeah,
because
so,
I think these
so
guys custody a lot of fiat funds.
Yeah.
And I think yields are quite interesting,
100%.
efficiencies are there, but it's always the retail side that we hear most, but treasury doesn't come across that much.
Yeah, so we just talked to a stablecoin provider now, right? So I think the way that we see it is that the real magic happens when you can move value onto a stablecoin, you can earn yield on it while you're sitting in that, and then you have a yield-bearing asset that can be used as a form of payment. And no one has properly cracked that yet, but it's coming very soon. Mm-hmm. So even if I'm holding a stablecoin for 2 minutes, I'm able to earn something on it, right? And so many of the bigger corporates that we've talked to are saying, okay, so I have to pay out, we're speaking to one company who has to pay out 20,000 suppliers globally. And they said, how do we enable stablecoin settlement for all of our suppliers? I have a treasury that sits on chain. I'm able to earn yield on that. And even during flight, I'm able to earn yield up until it's no longer mine, right? So these are the kinds of things that we're talking about, which surely changes the game. Even for us in Dubai, the way that it works is if we have any extra float, I have to print out a bank form. I have to sign the bank form, and I said I will deposit this into my bank for 1 month, or 2 months, or 3 months. Banks are they're just banks, right?
Yeah.
So I think all this stuff around enabling them to really leverage the benefits about being instant, being fast, settlement is quick, all those things. I think this is where it's really going towards, and a lot of the larger corporates that we're talking to are figuring out how they can also benefit from that. In Turkey, it's a bit different because some of your overnight rates are so high that we still have to crack how we can match that, but I think it's coming.
And just to that, I mean, I'm German, I live in Germany, and to that sense, Turkey is not behind sort of, for example, German banks. Everybody is still, they all have their teams, they all have their blockchain teams, they really know what they're talking about. But as it's early stage, it's not, for example, you could go to Deutsche Bank and buy Ethereum and stake it on sort of the online banking solution from Deutsche Bank. So it's something which is it's more happening for the neobanks and obviously for the exchanges. But unfortunately, sort of the TradFis, when it comes to their product offering, they're not there yet. It's just a question of time. But then, as you mentioned, regulation obviously is super important. Is something we support and also teach them or help them understanding the products and the environment. Because it's in all our interest that customer funds are safe, that institutions are safe. Because we don't need more FTXs in the years to come, right?
Tim, before the panel, we were talking about the change in US, and I joined Token 2049 Singapore and Dubai. Previously, I was seeing more maybe Asians or people from Russia, Ukraine, Turkey. This year, I saw lots of Americans. So how did Trump's administration change affected the crypto industry in terms of regulation? What is the more trending topic? I see one of my friends who came from LA. He's also curious about the change in US.
Yeah, I mean, it's not only about the administration, but really about the SEC as well. Obviously, Gary Gensler was, had a great knowledge about blockchain and cryptocurrency. I actually did an online course with him with the MIT, which probably you can still subscribe to. And at that time already, when I saw all these videos, he was already quite pessimistic. But obviously the change at the top of the SEC was groundbreaking. From our perspective as sort of our sales team in the US, was short of being quite depressed about the state of staking products and offerings. We pulled a lot of products out of the US because there was basically no support for it, or better, our customers, like the exchanges, they offered it and then stopped doing so. So this is now coming back. It's coming back even bigger. There's a wave of institutional adoption now to crypto and blockchain in the US. We are super excited about this. We're the only larger American staking provider. We have also Goldman Sachs and JP Morgan and Citi not only as customers but also as investors. So we're excited about our situation, our position in the US market, as it's also with what the Fed allows the banks also to hold and custody themselves. So huge changes which are really well suited for our product stack.
Yeah, previously, sorry.
I was going to comment on one thing. I think with Gary Gensler, everybody thought he was shorting Ethereum, so that's why he was doing all that stuff, but you never know. When you look at US, there's a contrast between Gensler and post-Gensler, which I find quite interesting because it's quite laissez-faire right now. Everything goes, everybody's going public, it's great, but consumer protectionism, which kind of didn't prohibit from FTX accident happening, is still not addressed clearly. When you look at Turkish regulations or VARA or what's going on in Singapore these days, you see a different approach from regulators. Sometimes it is very, let's say, prohibitory. It's almost choking the industry, which is what happened in the US before Trump's administration. And then here now in Turkey, you have a little bit of a mix. You don't know if it's prohibitory or progressive. And then you look at MiCA, which is much more robust, yes, difficult to obtain and maintain, but it's a little bit more clear. And I think the challenge is that we don't have a global standard on this, and I think crypto has no boundaries. And yes, the waves or changes in China, US, Turkey might affect the global sentiment, but I think the regulators haven't done a good job of addressing basic investor consumer protectionism globally. That's still not done yet, in my opinion. And secondly, they haven't really agreed on what are the playing rules across countries. You have this in the banking industry. For example, if you look at SWIFT, how it works in the US, how it works in Turkey, how it works in Singapore are 98, 99% the same, right? So I think when you have a travel rule coming in or other things, I think regulators haven't really connected to discuss hey, we are doing these best practices in Europe or Singapore or VARA or Turkey or US, and what are the common challenges that we are trying to resolve. And I think when you look at how these changes impact us, consumers and investors and institutions will look for guidance. And when you don't have that guidance and clarity, it's just going to delay progress and innovation. And for example, we believe at Outrun that blockchain is built for payments, nothing else. And I think we haven't really seen the full impact of this on payments. I know you have payments background, but payments companies are also like understanding what is a T+0 settlement means for a small merchant, cash flow wise, etc. So I think we still have quite a mosaic globally.
I agree, and it shouldn't be sort of always, the industry asking for or looking after the regulators and waiting for them on what to do and what not to do. I think we, as the industry, we should, provide clarity and security. For example, we should have all staking providers should stick to the same rules, and we should come up with these rules, right? As I give you an example, sort of slashing insurance is one thing. So we provide slashing coverage since day one, right? We were the first to do that. We worked with a big American insurance company. What is slashing? Slashing is basically when you lose your funds in case there's a node malfunction. So we, being the node provider, if we don't do our job properly, which never happened to us many years ago, and I think the last slashing incident was like $80, but it can happen. We need to make sure that everybody in the industry, all staking providers, stick to those rules. So everybody should have, because that just helps sort of getting mass adoption, providing clarity and security for customers and institutions. And then same thing like audited financials and stuff. That's what we do since day one, and we just encourage all participants in our industry to do that. So, there's full clarity.
I think what's going to happen is that the regulations will be led from the US, right? If you look at, a Genius Act and some of the other ones that came out, if you historically look at innovation and how it's come out, in the States, it always starts in the West, and then it goes towards, Washington. Cryptos may be a bit different, but Uber is a great example, right? Uber started off no regulation, and then they let the industry develop or mature, whether intentional or not. Regulations came out, and then Uber expanded, right? In the US, you have, Coinbase and so many other large crypto companies, not just exchanges, but liquidity providers. You have funds, hedge funds, staking providers, all these companies. So I think there's enough data to understand the market and the dynamics, and how do I create a framework that's both protecting the consumer, but also lets it grow. And I think what's going to happen is they're going to refine this, and then you'll see all the other regulators globally adapt or make changes to match that one. And I think eventually you'll get to like something that's quite similar.
Yeah, I think globally, regulators lag, and then they follow the industry. Yeah. But I think in UAE it might be the opposite.
So what happened was, we saw, if you think about it, Hong Kong was leading first, and then Singapore came out. Yeah. VARA came out relatively early in 2022, 2023. We were the second firm to get licensed there. And now, everyone's talking about the States, right? Yeah. And you have markets like Pakistan, Lebanon, Nigeria, who are coming out with frameworks today, but they're quite slow. Or I think they're taking their time intentionally. So we'll see what happens in the States first. But the way that UAE or Dubai is really trying to position is, we want to be the international crypto hub outside of the US. Right? That's not a quote, by the way, but you see a lot of work to attract crypto, these different firms, crypto firms. I think Hong Kong had a lot of excitement. Singapore, I think, as someone said, just came up with these new rules that are quite restrictive. So UAE is still trying to position. Now in Turkey, I think the domestic market is so big that you don't even need to be a global hub, right? You have enough of a domestic market. So I think as the regulations here refine and they get stronger and they figure out how to better involve all the players, I think it's going to be really strong here as well.
since we are in Turkey, my hometown, what's your recommendation to maybe Turkey, to regulators, or how can we increase the adaptation of institutional investors? What kind of products should be done? Any recommendations, starting with you? And also maybe some futuristic views. I want to hear what kind of products we will see in future. First time I heard Slash, for example. Can you give us a futuristic view of the?
I mean, if you're asking for a wish list, I'll give you a wish list. And I think if you start off with yesterday's comments from Mehmet Şimşek, the president of Central Bank in Turkey, I think I understand the logic and the approach. He's trying to implement fiscal discipline and controls and stuff, but I think most of his comments are, to a certain extent, prohibitory for the industry to develop. So I would expect regulators to your point, Tim, work with industry players more closely and have a much more transparent legislative process so we can at least see what they're working on and we can provide input and discuss, etc. Obviously, certain players will try to manipulate the conversations and say, we want this, we want that. Incumbents will try to block international competitors from entering the market, putting local talent rules, substance rules, etc. But I think regulators need to look at for the best interest of the country and say, if we have a progressive, open, transparent regulatory process, it will benefit us in the long term. And I think in Turkey, we have seen that this regulation that we are trying to navigate right now. When I say navigate, by the way, certain things are still not clear. Yeah. It's very open for interpretation, and you have to go to Ankara and talk to them and understand what they actually mean or want. And you see that it has taken them a few accidents to come to this level. You had a Todex accident, you had a Luna accident, other things, some local, some global. And I think, unlike SEC, which regulates by enforcement, because SEC's only KPI is the amount of fines and penalties they issue per year. They're very proud about it, and they regulate that way. I think Turkey can actually adopt a little bit more of an approach that's common in Europe right now, MiCA, which is a very robust framework. It's been studied by many countries, many different needs. I'm not saying copy-paste and start using it, but I think there's a gap between what we have in terms of regulation in Turkey and VARA and MiCA. And I think since we haven't really established it and cemented it, it is right now the time to listen to the industry players in the market, both local and international, and see what could actually benefit the economy and the long-term viability of the business or the industry, versus just like, oh, we need to increase our tax income, or we want to, push out some international competition, etc. I think that's missing in Turkey right now, that transparency.
Thank you. Mo, what do you think?
Yeah, I think if we put retail aside, I think from a business perspective, if you want to grow foreign direct investment, number one is tokenization, right? So we speak to a lot of companies who are saying, hey, I want to explore how do I tokenize my buildings, or how do I tokenize gold and do all these other things. So I think creating a framework and enabling tokenization and letting external or foreign investors invest, that's number one. I think number two, like we talked about, stablecoin payments is a big thing, right? There's a lot of discussion around currency, controls and those kinds of things. I think if you let your domestic economy and your businesses and your small and medium-sized businesses flourish and give them ways to transfer money or do business in a more efficient way, you'll automatically benefit the local economy. So I think enabling stablecoin payments would just be a huge, huge benefit.
Which is missing today in the regulation.
It's missing, yeah.
There's no comment about it.
Yeah.
Team?
Yeah, I mean, we see just a general uptake, obviously, in staking and wallet infrastructure, right? I mean, you asked for sort of the future. We see the future of finance really closely connected to wallet infrastructure, and that means, and that's probably the idea of the whole Web3 many years ago was about decentralization, right? And I think in the last years, our market was still very much centralized. There are still some big players, some big exchanges. The idea was, just like Web1 in a way, to, have a mobile phone, have your wallet on there, and, not needing being a customer of a big exchange. So, it's all about sort of providing wallets for millions and millions of users, and then connecting those wallets to certain services such as staking or other yield generating products. Yeah. So we see that closely connected. What's going to happen with wallets? How are they structured? How decentralized are they? On that, and then giving customers opportunities to buy, trade, and whatever, but not so much under sort of the wings of a big exchange. Yeah.
I think global there are a couple of trending topics or buzzwords. One of them is of course AI and digital assets. So will it continue like this, or for you what will be the next buzzword? Or will AI also affect digital assets industry? Is it already affecting?
Yeah, I was in Dubai at Token 2049, and I just want to quote CJ, the Binance CEO, who had a really interesting comment in terms of crypto will be sort of the currency of AI. Okay. Right? I thought that was interesting, sort of the connection of, it's not AI is going to come in and crypto or blockchain will disappear. Which role will crypto play in an AI-dominated world? So I think that's sort of where the fit is.
You want to comment, add anything?
Good. Well, being a venture capitalist for many years, I always look for patterns that are easy to explain, and it's an anecdote that I started using. I think stable coins are the new SaaS. Everything is about stable coins, and that is the SaaS business model of today. And going forward with the combination of AI, you're going to see payment efficiencies being unlocked. You're going to see different things for consumers being unlocked. So I would say the next buzzword or the next 12 to 18 months, 24 months, we're going to see increasing VC investment in AI, but I think the intersection of AI with stable coins will be interesting, especially considering our industry.
But absolutely, I agree. I mean, we saw it obviously with the Circle IPO, yeah, which is now, crazy valuation, but yeah, well-deserved, obviously. But then also we see Tether escaping Mika, right? Yeah. So I think there's still some way to go. And then also we're talking to stablecoin issuers as well. They're already up and running as a company, but their regulators didn't really give them the sign-off, right? So they're basically selling hot air right now. Yeah. So it's early days, obviously we all know sort of the potential of stablecoins in borderless payments, and just the amount of money which can be saved is just unbelievable. Yeah. So super exciting area. Yeah.
Okay. So let's make one last short tour, then I'll open up for questions. So what's the key takeaway message from this panel? We talk about lots of things, Turkey, adaptation of institutions. You can either say one word, one sentence. Ersoy, I want to tell this because I'm on stage now, it's my time.
I think from my perspective, I think we're very lucky to be here. I think creating a regulation in a market that's so big and that's already quite developed is very difficult. I think the opportunity is tremendous, and with regulation, you'll see a lot more demand, a lot more adoption. I think this is just the beginning, in Turkey specifically.
Yeah. I mean, my takeaway or highlight would be, if you're a bank, don't try to become an exchange. If you're an exchange, don't try to become a bank, and just keep them separate and make sure that you understand the difference.
Yeah. The future of finance will come to any country. Obviously, Turkey, with a huge population, will be absolutely key for us as a company. It's our first time here. Also super excited about the conference, to be honest. I was only at the Nordic blockchain conference last week in Stockholm, which was probably 10% of the size of what I see here. So I'm blown away by the attendance here and the quality of the speakers and the panels. It's an exciting market, and for us, super important to get into it.
Yeah. Well, I lived in Dubai 9 years, and I talk about Dubai a lot. I said nice things and come to Dubai, or like promoted Dubai a lot. But also I was a bit jealous because they took a role from Istanbul or Turkey. So I want to see more institutional, international investors here. Turkey has the potential, big population, talented people, especially banking sector and fintech is very strong. I think it's number one globally because I have seen different countries. So hope to see more institutional or international investors like you here. Now, we have 5 minutes. I would like to have some questions, so don't be shy. So I see a hand. Also, can you introduce yourself, and do you have a microphone or maybe
We can hear
microphone? Var mı? Just wait a sec so that everybody can hear you.
Can we ask them questions?
Yeah, you can ask the question also. I mean, but first introduce yourself and your question to whom or to all of them.
Sure, thank you. This is Ralph. First of all,
We
thank
cannot
you.
hear. Can you?
Oh, how's
Yeah.
it now? Yeah, thank you, first of all, to the panelists. It was an amazing, and thank you. To echo what you were saying, I live in the United States, and what I've seen is in the industries that emerges from the United States, mostly what happens is the industry derives from United States, and then it kind of dissolves into other industries. Much like the topic here, the emerging markets, I think, have a pretty good advantage because the regulatory aspect in the United States is very rigid. So coming up from there might be, in this specific industry, hard because much like the big companies, when there's an incumbent and then there's a new startup, they're more able to move quickly. The small companies are able to move quickly, and then this industry is also a new one. So I was wondering how you anticipate emerging markets like Türkiye taking a stance and maybe leading the way in this industry, basically.
Want to comment?
Good. You're Turkish, you want to start?
Well,
Yeah, I'm
sorry,
Turkish,
just
yeah.
to be clear on the question, so that how do we help in markets where there's no strong regulation and how we lead?
Hello. Let me clarify. So I believe that emerging markets have more freedom to develop new technologies compared to the US, which has more regulations, much like a startup compared to a big company. They have more room to take risks and take new advantages of a new industry. So I was wondering how emerging markets like Türkiye might have an advantage in this field of neobanks or adopting institutional crypto infrastructure.
I mean, I can take a stab at it, and let's see. I mean, if I understand you correctly, so when you look at emerging markets, we tend to think that innovation happens here easier and faster. It requires certain components: capital, talent, stability, no war zone, whatever, etc. Right? So when you look at mobile phone penetration as a technological curve that impacted emerging markets. In Turkey, most people didn't have landline phones, and then suddenly everybody had 2 cell phones. So a new technology is adopted faster in emerging markets if it's replacing an incumbent technology. When you look at crypto, which is, let's say digital assets and crypto, it needs to have certain regulators in place, just like driving a car. You need to have the seat belt, you need to have the airbags, etc. And yes, you might have a skateboard and you can do certain tricks, but it could be also a dangerous accident, right? So I think when it comes to money and monetary policy and monetary investment, etc., you need to have certain legislation in place for any new technology to flourish. I think Turkey didn't have a regulatory framework for the last 15 years. And the market has grown not because of lack of regulation, but because of the macroeconomic needs of the market, in my opinion. High inflation, unemployment, the need for a quick buck every week. People were taking bank loans to buy crypto here, right, back in the day. So I think the risk appetite varies, but is it educated and progressive risk appetite, or is it just opportunistic risk appetite? That's, I think, the distinction. Any good technology can come from anywhere on the planet, just like any entrepreneur can come. But I think in certain industry categories, you need to have certain protection mechanisms in place for anything to flourish, a sandbox environment, so to speak. And I think, yes, Turkey is, we invented buy now, pay later, but we didn't tell the world about it, right? Banks had installment plans for up to 18 months a few years ago, and this was in place for 30 years, but Klarna comes across and markets it and says there's a new category. So I think certain technologies require a platform, and Turkey didn't have that and didn't have the macro setup for it. But yeah, hopefully it will cherish. Yeah.
I also want to manage the time. That's why I
Sorry.
stand up.
Yes.
You wanted to ask a question to the audience? You were saying, can we ask a question? You're making
No, I
a
was just
joke.
kidding. I was joking. I was joking.
Maybe one more quick question, if somebody has a question. I think, okay, there is no question. So I want to thank you for all my panelists, Elbruz, Yılmaz,
Thank
Mo,
you so much.
Yousef, and
Thank you.
Tim Clausen. Thank you very much for listening us.
Thank you.
Thank you.